Hi, this is Randy Finney with the Right Side of the Chart, and this is a late morning session update for Wednesday, September 11th, 2019. Just do a quick overview. I just want to show you a few charts, give you an update, show you what I'm thinking, how today may play out, near-term stuff. So, for example, in the trading room, I put in the day trading group, which is just active trading in and out stuff. Day trade ideas don't make it to the front page. That's something reserved really for the trading room. Most front page posts are for swing trading, market analysis, that kind of good stuff. But I did mention here, let me show you this chart, that I'm looking for a push up to about 78.83. That's his previous reaction highs on NQ. This is again, this chart I posted a little while ago, about half an hour or so ago in the trading room, saying I'm looking for a push up here to at least this level right there, that's 78.83, and so I have some NQ longs that I plan to sell. My plan was, and I may change it to sell all of them. I said I would sell 2/3 right there, expecting at least a little reaction, maybe even more off that level. Whether or not we get a reaction, we could also thrust up here. So in other words, my confidence on whether we get a reaction, I think we'll get at least a minor reaction on the initial tag, a pullback, and so therefore that's why I have a order set just slightly below that, about 78.82 1/4, I think it is, to sell 2/3. May modify that and just sell it all. And then my plan is to either, if I'm going to leave that remaining third on, which is right now the plan, if and when that level's hit, you just trail a stop up at that point and see if give that position a little room to run, and maybe then put in that marginal new and divergent high. Remember, I talked about it here. We had divergence right here. We had a correction it was small divergent high right there, and that led to a small correction, just like a small divergent high here, relatively small correction. A little bit bigger high, bigger correction, bigger high, bigger correction. So to look at it this way, and again, this is micro analysis. This stuff sometimes it works out great, sometimes it doesn't, and that's what stops are for. If things go the other way, but this is how I would draw it out. And this is the same as that wedge I drew out this morning, the potential wedges on SPY, QQQ, and IWM, where I have us going up, making a marginal new high. Even if we make an equal high in reverse, that's still technically negative divergence if you have the indicators making lower highs while prices are making equal highs. But if you get the higher highs, all the better. And so again, it would just have a marginal new high. Now this scenario contrasts somewhat with the market breaking out to new highs. I'll get to that in a second. But I just wanted to show you. Now the range in here, again, assuming I'm right, and I'll stay long up until here, it's very small, the marginal new high. If we pop those highs, I don't think it'll go very far, and then at which point, I'd rather position short up in here, maybe a half position, and then add if and when these trend lines break. That's the bottom of what would be a wedge pattern. Again, it's not a wedge right now because we don't have that higher line. I drew that line. It's just a potential scenario. It's where I'm leaning towards. This is why I'm trading today, and again, that's why I wanted to share that with you. So that's the plan, and if the plan changes, I'll let you know. Now I did I did mention that yesterday we had this divergence here, and it continues to build. I showed you this wedge right here in IWM. We continue to move up. Oh, let me take that back. IWM does not have a divergent high, and you can see the next resistance is up here at a 156.53. However, when you look at the daily chart, and I believe this is what I covered yesterday, we have a key downtrend line. IWM is challenging that downtrend line right now. So I actually, right before I started the video, I took a short on RTY, a starter short position, which is essentially also hedging right now. It's only a fraction of the NQ longs that I have, but it will partially hedge those NQ longs. I think the upside in IWM is minimal right now, and what will probably happen, we already had a slight intraday pierce, so if we go back, let me go back to the 60-minute chart. If NQ has a little more upside, then IWM will probably as well, and it'll probably come up here at about that 156.53 level. So again, we're talking minimal upside. I just shorted it here, and you're talking 0.75% or less, half to maybe 0.75% is what I figure on the upside there, and then that would take us a little bit above here intraday, just like we had right here, and then boom, fail it. So I talked about this being a potentially bullish setup, bullish divergence, everything else, and that certainly could play out. But IWM expended a lot of energy just to get up to this trend line. Usually when that happens, you pull back at the very least. So again, so I think the risk reward right now is skewed to the downside on IWM. Any breakout I think will prove to be a false breakout. And again, this is a daily chart as well. It doesn't matter if you break intraday, it's how you close the day. So there it is. That's IWM potential short trade. And look, and if you're bullish, the ideal scenario would be to see another thrust back down in here, whether or not we hit the bottom of the wedge. If we did, it would simply extend the divergence and then go on to breakout later. Maybe come back in, consolidate a little, work off the near-term overbought conditions, and then break out. So I just wanted to share that as one potential trade idea. And of course, we'll go back to the wedges on QQQ and SPY, or again, potential wedges, because I drew out a trend line that projects and assumes that we take out those highs. So when I showed you the NQ futures a minute ago, where that resistance is right here, right at the top of the recent range there in QQQ, which is about, give or take, about 192, maybe a hair above. And we're almost there now. And so again, if we hit that, if we can get a little bit above it, it would just give us nice clean divergence. You can see the PPO turning back up here on the zero line. And again, this is why the odds for at least a marginal new high are pretty good. You have the PPO, that zero line tends to act as support when you're in a bullish uptrend, especially with that 9 EMA, the second of the two to cross the white dotted line. So that would look something like this. If we get it, give us that negative divergence. With prices making a new high, maybe up to about that 192.88 resistance, give or take, and then reversing. So that's, again, that's a trading plan now. And if this thing just went, by the time I got this video out to you, then that would change. Everything would change. And I will say too, no matter what happens, a break above this uptrend line and SPY. You don't want to jump the gun on one. For example, here's a little whipsaw through that trend line, but it has enough reactions there to be valid. But you want to see SPY breakdown as well. And SPY has a nice clean up trend line without any breakdowns below it. So here's your trend line on SPY. Again, potential wedge. We're almost to that previous high. And again, any marginal new high will be a divergent high. So now talking about a breakout to all-time highs, well, I laid it out, and it's certainly a possibility. When I've been doing the updates recently, I've laid that out in the daily charts. But that would take us quite a bit higher, and it would probably extend the divergences. Let me see. Let me walk this out here and measure it out. We're about 1%. Oh yeah, we're only about 1% shy of that previous highs on SPY. Here's that trend line. We can extend this, maybe a back test to that trend line. That's off the December lows. And so 1% to maybe 2%. Let's see how that would look on the 60-minute chart. Let's go here. Oh, we can see the high right there. Yeah, you know what? It's certainly possible, because here's our divergence line. Depends. If we go too high, we're going to burn through the divergences. It's not the be-all end-all, but I'd like to see those in place to help make the case that the breakout will fail. So yeah, there's that possibility of maybe another 1%. Well, 1% would just get us to the high, and then anything above that, so a marginal new high could be 1, even 2% above that. And let's see what it looks like on QQQ. Try to project this out. Here's your high right here. Here's where prices are right now. Let me zoom in a little tighter. If I grab on current levels, we go up. To get to the previous all-time high in QQQ, you need to run about 1.9%. Yeah, it's a little much. It might burn through these divergences. And so I'm leaning towards the fact that we don't make a marginal new high. I think all eyes are on that. And I said this before, and look, and it holds true. Usually when you get when you get within just a couple percentage points of an all-time high, and that's been the MO for years now on the markets, you're going to make it. Whether it's an individual stock or the equity indexes, it's almost like a magnetic field that pulls you in when you get that close. that's been the MO. But looking at these 60-minute charts, I'll tell you, it would look real nice, and I think it would leave a lot of people surprised too if we got very close and didn't take out the highs for the reasons I just said. Get that close, we've got probably a lot of people buying into QQQ, shorts getting scared and covering and getting out. And so to me, and I'm going to say this is my preferred scenario. I'm not going to tell you with the highest conviction, but it's the one I'm trading right now, is just a marginal new high here on the 60 minutes that reverses, and we don't make a new high before we go on to break this wedge. And then of course if we break this wedge, that should have bearish implications, bring us back down in here, maybe for a back test of that trend line. And also don't forget, SPY never tested the breakout level yet. And by the breakout level, I'm talking about the top of the August trading range, and that's at 294. So again, that looks something like this. So again, potential scenarios is, how I'm trading it now, a little more upside, then I'll reverse and to nothing heavy, and I'm talking my active trading account. Nothing's changed in my swing trading account. Reverse into shorts, and then add if and when this level breaks. Minimum target being a back test here, that 294 level. And so let's see, what would that look like? We'll go up here to about this level, about 300 on SPY, and we pull back down there. That's a 2% drop. And again, that would be a minimum target, and we'll see what happens from there. All right, and of course, like I said, if we pop a little higher, it's not much to that high, and we'll see if these divergences are still intact. And I'll tell you this right now, with 100% certainty, even if the 60-minute divergences are not, and again, and we pop to the new highs soon on SPY, you will have positive negative divergence, because the PPOs and PPO and RSI are lagging substantially at this point. But again, it depends if you did that soon. Otherwise, they could grind around sideways for a while, change things around how they look right here. But as of now, like I said, this would be, I think, my most bullish scenario for the no more than 3% upside from where we're at right now, before a substantial reversal, and maybe a lot more after that. All right, so that's that. Let me see if there's anything else I want to share with you. I'll bring up Crude, because I posted this in the trading room yesterday as a short trading idea. Here, so if you go in the trading room, and guys, make use of this search function. It does a great job of finding what you're looking for. So if you type in /CL, I always put a /. It's not case sensitive, so you don't have to use caps. But /CL, the / will help narrow down. And then you can see yesterday here, posted a setup on Crude. Crude rallied into the 58.79 resistance level, which offered a short entry right there at resistance. Or I said you could also short or bring to a full short position on the break of the trend line, and then you can see these targets right here. I also covered this in yesterday's video too, that the energy sectors, ETFs, XOP, XES, XLE, they're all at or around some pretty significant resistance. So I mentioned those could be quick pullback short trades on the energy stocks. So that was then. This is now CL right here. Perfect short entry to the penny almost. That's right where I posted. It was at that high yesterday, and then from there we did go on right after, make an impulsive breakdown below the wedge, and now we've hit, you've had two chances to cover at my first target, 57.14, but with that divergent high, I think there's more downside. I think at least my second target here at 56.76 will be hit soon. Especially, of course, if we take out the 57.14, and if so, then that should help. Let's just take a look at those energy sector ETFs. I looked earlier; they were up. XOP, you get more juice out of XOP or XES. Still up right now, but again, broke out of the trend line, but at price resistance. Hit it again today. XES. There's the other one again. Alternative downtrend line resistance and price resistance there. So they're not following Crude's lead yet. They're up right now, and that means you have what do I call it? Almost an arbitrage play or an objective short now, being that the energy sector's up, they're dismissing this drop in Crude. And again, I'm not looking for a huge drop right now, but a pullback in USO would probably come in and backtest the trend line. That'd give us a little more downside. And so what I can tell you, if Crude continues to fall from where we're at right now, I just showed you USO being down 0.5%, Crude futures being down 0.23. Remember, they're trading they start trading at a different time. We keep going lower, you'll see profit taking in the energy stocks. Right now, again, they're dismissing this to a little blip. And again, there could be more downside based on that failure there at resistance in there. So I just wanted to share this trade idea as well. And loop back again to RTY. I showed you IWM. There is well, the divergence is being burned through right there so far on RTY, but barely. And we're at a pretty significant resistance level. That line right there, about 1550 on RTY. So we'll see if our IWM fails at the downtrend line. Like I said, maybe a little bit pop above. And if I start to see a reversal failure, especially break of the uptrend lines in IWM and RTY, which I'm showing you right here, along with SPY and QQQ as well, if these trend lines go, then I will add to that position. Right now it's just a small starter position to kind of partially hedge because we're getting close to my bounce target on NQ. And then don't forget about the precious metals. Gold, it's trying hard. Oh, and this all, by the way, guys, this all ties in together. This is why I like to do a video and share my thoughts. Now, it's plans, the market doesn't always give you what it wants, but if it comes out to if my plan plays out, a little more upside in the markets than a reversal, then that would play well into the these precious metal longs I posted this morning. Gold, like I said, big level at 1500. It overshot it. Not a surprise. That's a momentum fueled overshoot. You had a lot of, this was a very crowded trade, all the PMs. And again, it was very well telegraphed technically, everything else. So there was a nice short to be made here on the break of this larger wedge. But then I've been pointing out for the last couple of days these smaller wedges setting up. Gold is cracking, but not impulsively, nor is it going to go far. Remember, the market is up today. The stock market's rallying. S&P is up quarter point. The tech Nasdaq's up 0.5%. So you're not going to see gold soaring right now. However, if my scenario plays out, a little more upside, the equity markets reverse, or maybe by the time I finish this video they start to reverse, then this should play out. And so what you're looking at here is a potential bear trap. When gold broke 1500, undoubtedly a lot of bears said, oh, that's a key support level, I'm going to short gold. Well, so far it didn't work out well for you. It proved to be a bear trap, but you can't put the nail in the coffin yet because you need to really get back up and start moving impulsively. That's where the stops are hit. For those that shorted 1500 on gold, they probably have their stops, or they'll start feeling pain if they don't have stops once we start climbing from here. So you have a breakout and you have a recovery, but not by a lot right now. We're talking just, it's a $1,500 or 1,500 point a futures contract here. So 1-2 points on 1,500 isn't a whole lot, but that's where I think it's going. I already gave you the targets today, and that's gold. Most important of all the flight to safety assets. And again, stock market correction would only help to put some wind behind the sails on this trade and get that one, get us clearly broken out. Same thing, treasury bonds I didn't update. They're ready to, well, you had some divergence, a little burn through, but you'll get a flight to safety bid, a snapback rally in treasuries, probably up to at least this downtrend line right here. Could probably give you an alternative trend line like that right now, a little wedge type pattern. And then of course you can get sometimes more bang for your buck trading. Platinum already broke out of its wedge, divergent low, held support like a champ at about 930, as I mentioned this morning. It's moving up, but it's not going to go too far without gold and silver coming on board online with them. Let's see, we're in more. I had another chart of silver. There it is. Silver broke out too, started to run, but as I said this morning, you need to take out 1838. That's my first target, first resistance level. And again, it all is contingent on what the stock market does and what gold does, or largely contingent, I should say, not exclusively, but largely. 1838, if that gets taken out, run up to 1865, and possibly as high as 1887 at that point. That's probably all I'll be looking for, but we'll see. We'll see what the outlook for the stock market is at that time, and see what everything else, bonds, and what they're all doing. All right, so those are the trades I'm watching today. Potential longs on the metals, a little more upside in the equity markets, then look to reverse, and maybe also longs on treasury bonds, TLT.